Hello, hello. Welcome in, everybody. Welcome to Zoe's Treasures. Thanks for coming to the tax show. I know you are just waiting for every Tuesday to hear about taxes, right? I actually think it's interesting. Tonight, we're going to talk about expenses. So on your Schedule C, what can you deduct? What are write-offs? And I'll tell you why I hate that word so much. So we're going to talk about what write-offs are. Everything, yes. You can just, everything you want, just write it all off. So that's what we're going to go through. It is probably going to be a little bit of a shorter show. Let's see. My husband's telling me it's too dark. Give me a second here. We're going to turn some more lights on. Let's see. What can I do? There we go. Hopefully that's a little bit better. All right. So, beer. Let's talk about beer or tequila. If we can write that off, we'll talk about it. I mean, if you're going to write it off, we need to have like the salt and the lime and the chips and all of that too, right? Flights to Aruba for sure. Anyways, next Tuesday night, I probably will not be on. I do have to go out of town for my other job, so I will be in Orlando next Tuesday night. But we'll be back at it the week after that. We'll be back with our tax show. So I have the shows. They're already there. You can bookmark the upcoming ones. So let's talk business expenses and write-offs. Oh, I was saying I'm only going to do probably on for like an hour tonight. I tried to start a tad bit early. I do want to raid into CG Boomerang at 9:20, so that's my goal. She is wrapping up the Battle of the Cameos, which I was on earlier. So as I love discounts. If anybody else was on there, please throw it in the chat. So I do want to go and see who is the winner tonight. It wasn't me. I didn't win. You know, big spoiler alert there. But all right, so let's get started. And please put your questions in the chat. I'm going to be monitoring it as best I can. So just if I miss it, please ask it again. And I'll try to acknowledge it if I see it so you know that I'm getting to it. All right, write-offs. Why do I hate the term write-off? Not that you care about my opinion on the word, but that word just gets under my skin. And here's why. You'll often hear it, and I see it in chats all the time, where people will be like, oh, it's a write-off. It's okay. Shipping, it's a write-off. Or you do this, it's a write-off. And I think it has a bad connotation. I'm going to start a giveaway, you guys. Halloween postcard up and going. And try to remember to do these tonight. And I think, it's a very legit word, the word write-off. But I think it gives a bad connotation. It almost acts like it's not your money you're spending or you're getting something free from the government, which isn't it at all. It is a business expense. So instead of saying write-off, say business expense. You don't go to the grocery store and be like, oh, my food's a write-off. No, that's an expense to your personal budget. It's a household expense. So the same thing goes for business. So I try not to use the term as much as possible just because I don't like that connotation. It makes it seem like it's not as serious as it is, or that you're not having to spend money and you're getting something for free, because that is absolutely not how it works. So tonight we are going to talk about everything that really counts for an expense. Thank you for your purchase from the bin. And really, what is the most valuable deductions for you as a whatnot reseller or reselling on another platform? So let me ask you guys a question. What's the weirdest expense? And I love discounts, no tequila. What's the weirdest expense you have tried to deduct? Have you guys ever tried to deduct something and your accountant goes back and be like, are you kidding me? Or have you put something on your tax return, maybe you don't want to admit it, that you're like, this is kind of in the gray area? No way. Nobody wants to own up to that, huh? Nobody wants to say, I deducted something. I'll share a story. I can't name names, client names or anything, but this was an auditing. But I had a client once try to write to put on their books a submarine. They were nowhere near in the submarine business, but they thought they hid it well enough from us. So that was probably the weirdest thing I've ever seen in my profession, was somebody trying to like get a submarine through. But you guys, y'all are like straight and narrow. Nobody's owning up to anything. We'll come back to that later on. We all live. All right. So let's talk about what's the difference between a deduction and a credit. So A deduction saves you on the tax. So if I have a $100 deduction, that saves you the tax on $100 versus a $100 credit is dollar for dollar $100 of pure credit going against your tax liability. So it's a little bit different. So if you are in the 20% tax bracket, a deduction will save you approximately $20, whereas a $100 credit, tax credit, would save you the $100 or refund you $100. So that's the difference between the two when you hear deduction versus credit. Those are two terms you'll hear thrown around a lot when it comes tax time, because they're actually very different things and they're applied in different manners. So we are talking about tax deductions. So the things that are going to reduce your ultimate tax liability or the tax that you're going to owe. Let's start with the king of all deductions out there for us as resellers, and that is your cost of goods sold. You'll hear that referred to as COGS, C-O-G-S, but that is your cost of goods sold. And this one's a little misleading. So we're talking only expenses on a Schedule C. Most of them are the same if you file a different form, like a 1065 or a 1020 if you're an S Corp or an LLC. But cost of goods sold technically goes under the revenue section. We're not even going to talk about revenue tonight. We're going to solely focus on expenses. However, as resellers, our cost of goods sold is probably the biggest expense that we have. So what is cost of goods sold? I'm sure most of you know it, but it is the purchase price, the shipping price, and the refurbishing price, or the price to make something sellable of whatever it is that you're going to sell. If you sell antiques, when you go to the thrift store and you buy something, or you go to the antique mall and you turn around and sell it, that's your cost of goods sold. So let me give you an example. I'm going to stick with vintage, but you can apply this to anything. I'm going to say a vase, but instead of a vase, you can imagine it being a t-shirt or a sports card or whatever it is that you may sell. So if you buy a vase for $10, that's my initial outlay is $10, right? And then I sold it for $40, but I had to pay $3 in shipping costs to get that vase to me. So like say I bought it at an auction and they were shipping it to me. My cost of goods is the $10 plus that $3 of shipping. My cost of goods is at $13. You all should be tracking this in some manner. We've talked about inventory quite a bit. I do have an inventory PDF. And who's going to get that? Divine Discontent. That is going to you. It is a Halloween postcard. Congratulations. I'm going to take this off because this bothers me when it's up here. There is an inventory PDF if you're interested in purchasing that. And that kind of goes into your cost of goods, ways you can calculate it, how to figure all of that out. I'm going to run another giveaway before I forget. And this one is, what do we have? Where you're going to get some bookmarks, some inspirational messages, and a vintage postcard. It's actually an antique postcard. It's early 1900s. Where is that at? Hazel, where is the sheet to keep track of? Oh, it is. It's not actually to keep track of, but it explains all about inventory and cost of goods sold. It is in my Buy It Now. So if you go down here to the little store, and you can find it in there. If you click on the store, there'll be a tab at the top that says Buy Now, and it is listed in there. I do have a lot of those on flash sale tonight. We just talked about cost of goods is your purchase price. Purchase price, the shipping that you've paid, and anything that you cost to refurbish it. What it doesn't include, all right, my husband's red chatting me. I'm not sure. He's telling me to push buttons. I got all the buttons that he normally would do. So, honey, you're going to have to clarify because I have no idea what button you want me to push. It just says save and notify me. Why does it say that? Oh, no, that's the, no, it should be there. The save and notify me is under auction. Go to Buy It Now. All right. So we went through an example. What doesn't it include? It doesn't. So your cost of goods. Waiting for price reveal. Oh my gosh, what is going on with it? All right, let me fix it really quick. I have no idea what's going on with it. Inventory. Oh, there we go. Okay, I just don't want to pin it though. I don't like them pinned, unpinned. Okay, it should be there. If the other ones, if there's anything else that's not working, just let me know. Oh, none of them are working. Goodness gracious. I did a bunch of them. Hold on, let me just go through and hit start on all of these really quick. I only have like 6 of them that I put on Flash. Sorry about that, you guys. I don't do flash sales that often, so I'm still learning, getting kind of used to the whole process here. All right, hopefully that's good enough. Let's see if we can unpin this now because I don't like them pinned. There we go. All right, maybe that works. Okay, they should be on for 2 hours, so we should be good. I just looked at them. Yeah, they're all on for 2 hours. They're going. We should be good now. Okay, thank you so much for letting me know that. What cost of goods does not include? Your personal time. You hear a lot about people, like when we talk about pricing, you hear this on all kinds of different chat shows all the time. You got to take in, financial, sorry, I'm looking. That one should be up and going now. It should be working. The All About Financial statement should be working too, sorry. It doesn't include your time. We hear it all the time. We hear people say, oh, well, when you're pricing your items, you got to value your time. Thank you so much, Southern Charm. Yes, please send me your email address so I can send that to you. You hear this, but cost of goods doesn't take into consideration your time. There is nowhere that your personal time goes on your financials at all. You don't record your time unless you are actually paying yourself a payroll, like legit payroll. Your time does not go onto your books. So that's a whole other concept when we talk about pricing and how to like value that. But as far as your cost of goods sold, time isn't one of those things that goes into the formula. Okay. I just wanted to make that point because we just hear it so much of like, make sure you're accounting for your time. Well, you don't really account for it when you're doing like the bookkeeping side of it, and definitely not on your taxes. One of the key points that I do want to bring out, anything we talk about today, the IRS says any business expense that you deduct has to be ordinary and necessary. Those are 2 key words. You're going to hear it over and over. Ordinary and necessary. So anything you deduct, yes, Aruba may be necessary to you, but is it necessary to the IRS or necessary in the course of your business? So ordinary or necessary in the course of your reselling business. So let's talk about what you can't deduct. Your fingernails. Anybody here ever hear somebody on Whatnot say, oh, you can deduct your nails because look at, you're showing items. Like I'm showing this pen and my nails. You ever hear that? I've heard it. I've heard people on Whatnot say you can deduct your nails. Yep. You cannot. Country Keepsakes, you got that giveaway. Congratulations. Thanks for being here. Let's run another one. All right, next giveaway is another Halloween postcard. So ordinary and necessary, and it's ordinary and necessary to the IRS, not to you. Your haircuts, your makeup, skincare routines. I don't care if you're on camera. The IRS doesn't care if you're on camera. I would love to deduct all of that, but none of it is deductible as far as your taxes go for your reselling business. We'll talk about what is some of the stuff that is deductible, what is ordinary and necessary in the course of your business. So the big one after cost of goods, that was our big one. The next one, anybody have a guess on what's the next biggest expense that you would have? No guesses? Office supplies? Okay, our home office, probably one or the other. Labor. I'm getting some interesting things in Red Chat on what you may be able to deduct under certain professions. Overhead, shipping supplies. There you go. Whoever just said it just went past me so quick. Space Coast Vintage. That's the answer I was looking for. Most of the rest of you, except for my Red Chat people, are correct. That it is shipping supplies is probably the next biggest expense you're going to have. Y'all, I didn't say this at the beginning, most of you know, but if you're new to me, you do not have to buy anything to rewatch. You can always go to my YouTube and see this at any time. It's recorded there. Our, multicast to YouTube. So, all right, shipping supplies. So bubble wrap, boxes, paper, all of that stuff. Oh, Shop Coast Pastures. Well, I'm glad you're here. All of your shipping supplies. But what else? It's not just shipping supplies. What about your shipping expense? When we're talking whatnot, we get those 5 free adjustments, right? But sometimes you go over an adjustment and you got to pay some money. Whatnot takes it off your ledger. That's shipping expense. Just like shipping supplies, all of that is tax deductible. What about your free and reduced shipping? Or, when you do your reduced, or if you do, like some of us do free shipping, do you know you never got 5 free adjustments until you hit your 1K? That's weird. I didn't know they did that. Wow. So if you do free or reduced shipping, that's an expense to you as a business that you can deduct or write off at the end of the year on your taxes. Giveaways are deductible, absolutely. But I really want to point out the free or reduced shipping. I want to talk about that a little bit. This is one of the things you can control on timing. We're going to talk about a few of these expenses that you can play with a little bit to help depending on your tax situation. So free and reduced shipping can be one of those. If I'm getting to the end of the year, maybe I want to increase my revenue a bit, but I also want to have a few extra expenses. You want to do one or the other, you can sell more. But say I'm like, you know what, I'm making too much money. I know you're like, how can you ever make too much money? This is when it comes into tax planning. Maybe my revenue's too high. I haven't calculated it correctly throughout the year. I'm going to owe more on taxes than I thought. And this is where it comes in, where you're kind of looking at this on a regular basis. So maybe come October, November, December, I want to start offering reduced shipping in order to help build up some of the expenses that I may be able to deduct in order to offset tax liabilities. We'll talk more about other things you can play with a little bit. Does Whatnot calculate this on analytics, the giveaway and reduced shipping, so that you can keep track, or do you have to keep track of every show? You need to keep track yourself. Whatnot will give you a 1099 at the end of the year if you meet the threshold. But these are all numbers that you should be tracking on a regular basis. Now, you can see what your giveaway spend was on Whatnot, but that's not your cost of goods. So your giveaway includes the cost of goods, whatever you're giving away, right? So right now it's a postcard for me, plus that shipping expense. Whatnot will track the shipping side of it, so you can see the shipping in your analytics. Is there a way to see how much we paid for adjustments? Yes. The only place to see that, truly see that, is to go into your ledger. So if you, under financials, if you're in your seller tab on the left-hand side of the screen on a computer, I do not know on the phone. On a computer, left-hand side, you go into the financials, and then along the tabs on the top, you click ledger, and you can see that number. I track mine after every single show. I look at my ledger, I track all my shipping costs. Kathy, you got that postcard. Congratulations. Thanks for being here. They do, Southern Charm. I totally agree. Y'all, Whatnot's financials and the way they do their ledger and the way they accumulate everything, I don't want to say it's wrong. It's just not the most user-friendly system out there. Now, their analytics screen is pretty good. You can really get some good information out of their analytics screen. But the ledger is kind of messy. If you do a ton of transactions, so like I Love Discount says they keep track of the ledger every day, they do need to integrate it. But if you are like them, maybe you're a volume seller and you have a lot of transactions going through there, you can export your ledger into Excel. And then if you know how to work Excel, or maybe I think what Google Sheets or something, you can filter and you can do pivot tables and such to make that information a little more manageable. That's how I find I can work with it. It's wrong. Yes, it is wrong. What do you use to track all of your stuff? I'm sorry. No, don't never be sorry for the questions. I would much rather answer your questions than go off my notes. I use QuickBooks. However, I would not, I'm not saying I don't recommend QuickBooks. I personally will not recommend one way of tracking over another. You need to find what works for you. So if you are a paper and pencil person, maybe a notebook is all you need. If you love spreadsheets, maybe a spreadsheet, Excel or something. If you really are techie and you want a software that's going to give you all kinds of reports, maybe your accountant uses QuickBooks, so you can integrate it with, what they're doing. I would use QuickBooks, Reseller Genie. There's a bunch of them out there. Find what works for you and that you're going to do on a consistent basis. That's more important than actually what the tool is. So that's my answer for that. But please keep asking any questions. One of the things we often forget to include when we're talking about shipping is shipping insurance. It's not that often, at least not for me, that I have sales over $100 in one box that I need to insure. That would show up on your ledger too, but making sure that's deductible. When you have to pay to insure a box, that's a deductible expense also. How many of you buy boxes for shipping? Just throw something in the chat if you buy boxes. Not just reuse your Amazon ones, because I think we all try to do that. Southern Charm, Kelly's Lighthouse, our padded envelopes, so you're buying whatever it is that you're shipping in. All of that, and those add up quick. I mean, I don't know about you, but I can't find them for less than about 95 cents to slightly over $1 a piece. That adds up quick. All of that's tax deductible, so making sure that you're tracking all of those expenses. I'm going to try to give you an example, is if you spend $500 on any shipping supplies, that's $500 directly right off of your taxable income. So tracking all of your expenses is vitally important. Yes, you should be saving receipts. Yes, you need receipts if you're ever audited. What's most important is that you're tracking revenue and expenses and cost of goods sold. So let me rephrase that. Revenue, expenses, and inventory. So using QuickBooks, using Excel, using any of those things we just talked about, that's what's number one important. Then, if you're ever audited, you will need the receipts to prove to the IRS. So yes, you do need your receipts, but the receipts are kind of like your backup. Usually you don't even give them to your accountant. Usually when you go to your accountant, you're going to give them some type of report out of a system, an Excel sheet or something that you've added up. Southern Charm, I love reusing your boxes. Are you selling? I'm not really selling anything today. I do have some stuff in the shop or in the bin for sale, but this is a tax talk. So today we're just talking about taxes and accounting. So if you have any tax or accounting questions, please feel free to ask me. I have a separate email address for sourcing products. That's good because then you can easily isolate all of those receipts. I love that. When you track your inventory, I just lost the question. When you keep track of your inventory so you know what you paid and sold it for, do you write it down, a detailed description, or take a picture? I just log numbers. I don't even track by individual items per se. You don't have to track by individual items. Think about the people who are doing thousands of or hundreds of items a show. It would be too hard to track every individual little item. I track by bulk. So you need 4 things for inventory. Your beginning inventory, so what you started with, what you add in, what you take out, and what's the ending. So what you're adding in, the IRS doesn't care. You don't really need to know every little individual item. You need to know it in total. So the way I do it is everything that comes into my inventory gets a sticker, a color-coded sticker that represents the price I paid. So then when I sell it, I can easily know my cost of goods sold. I add it all up by show. So I do it in total. Handmade advisor. Clarify that question a little bit. Are you looking for a handmade advisor or do you have specific questions? Let me know. So I need to be writing down everything I buy. Yes, you should be keeping track of some sort. Even if it's just for your inventory. If you want the most simplest way to track your inventory, take 4 sheets of paper. All right, you don't even need 4. Take 2 to start with. 1 to everything that comes in, 1 for everything that goes out. So every time you come home and you bought something, take your receipt and jot down that total price, okay? Then every show, whatever that cost of goods was for that show, write down what that total price is. And if you can't track the amount going out, that's okay, as long as you know what's came in, and at the end of the year, you'll be able to value what you have. That's what's most important. Do you recommend saying, Raise, I'm going to answer your LLC question, but I'm going to wait till the very end. That takes me on a little bit of a tangent, but I will answer you. Give me about 20 minutes and I will give you an answer, maybe 15, okay? If you are tracking specific items for inventory, can you switch to an amount in and out for them? Yes, you can track your inventory any way that you want, and you can change it as much as you need to. I would recommend find a system that works and try to use it as consistently as possible. So you're a handmade seller, thoughts for tracking cost of goods for handmade. I want to track on Excel, but struggling. That would be a little bit harder because I would imagine you would buy, and I'm just making something up, but like a big bag of buttons and maybe some fabric, and you're only using little bits and pieces. So that way you're probably tracking more by percentages. So that's a little bit harder. You could set it up in Excel. So that would be, I would have to talk to you a little bit more to understand exactly what you're selling, what you're making, what you're buying. Feel free to send me a DM and we can talk a little bit more if you want. What you paid, oh, okay, thank you, you're answering that question. So what the next one, so after shipping, we talked about shipping, the next big deduction, home office deduction. So this is when a lot of people ask, can I deduct a space in my house? Yes, you can. The IRS gives you two ways to do that. There is a simplified method, and then there's an actual expense. So I will give you a very high level on each one. You divide, yes, so this the actual, it's like a pro rata, so we'll talk about that. But simplified, you can deduct up to 300 square feet at $5 per square foot. Simplified method. You can't just automatically take 300 square feet, but you measure your space, whatever the exact measurement. If you have a 10 by 10 room, you can take up to 300 square feet of whatever your space is, multiplied by $5 a square foot. That's a flat rate. That's the simplified method. That is, the IRS just says, hey, we're just going to give this to you. We're going to make this easy. Just do it this nice and easy way. Or you can do the actual expenses. So this is a portion of your utilities, your mortgage or your rent, whatever your situation is. It's really mortgage interest, not mortgage expense. It's just the interest on the mortgage. A portion of the real estate tax, any utility that goes into that room, and you take the square footage and then you multiply that square footage, the percent of your square footage. So if I say 5% of my home is used ordinarily necessary in the course of my business, and I can take 5% of my rent or my mortgage expense, my utilities. So there's two different ways, simplified or actual. This is where I would say get a good CPA or accountant to really walk through both ways and say which one is going to be best for you. Now you can change it. So 1 year you can do it one way, and then the next year you can do it another way. You don't have to stay with one when you pick one. So you can switch back and forth, which is pretty good. What if you bought a shed to run out of? Absolutely, yep, you can deduct the cost of that shed. Now that would be a fixed asset, which we're going to talk about, but you absolutely can deduct that cost of that shed. So what used to be a big myth, or what is a myth, and a lot of people believe this for many, many years, is that when you deduct home office expense on your Schedule C, that's a red flag, that it's like an automatic red flag for an audit. That is not true whatsoever. That is just a huge myth. What's the best way to find an accountant or tax advisor that, I don't think you need to find one that specializes in reselling. Here's why. Particularly as a CPA or a tax advisor, either one, they're trained to quickly understand businesses and synthesize that information into what's needed. The tax laws are pretty much the tax laws. We're talking a Schedule C here, a sole proprietor. There's not such a variation in tax laws within sole proprietors from your Uber driver to your reseller or whatever else, to maybe somebody walking dogs or grooming dogs. While they're very different businesses, the tax rules that go around those are very similar. Now, I wouldn't go and get a CPA who specializes in mining oil fields, obviously, but most of your tax preparers, H&R Block, some of those places, They actually have CPAs, and they have people that have worked there that specialize in businesses, and they don't have to specialize in reselling, and they are very intelligent people. I actually did H&R Block work as a CPA for many, many years. It was a great side income during tax season for many years. I wish I was for hire. That may be a plan someday, but I cannot. I'm not allowed to do taxes. This is as much as I can do. I work for a large firm, and it impairs my independence. So I have to be careful on what I do on the outside. So it is not a red flag. Your home office expense is not a red flag. And you can change it every year. One thing that most people don't think about when they're taking their home office expense, and this is something that you need to talk to your accountant about, particularly if you know you're going to be selling your home, or you're like, hey, I'm only here for 5 years and then I'm selling. And depending on the cost of your home, there's a lot of stuff that would go into this calculation. But when you sell your home, and this has nothing to do with business tax, just kind of in general on how they play together. When you sell your home, you can get up to $250,000 of that gain from your home tax-free. You guys can always rewatch up there at Zoe's Treasures on YouTube. So if you resell your home, there's a certain portion that you're allowed to earn from that sale that you are not taxed on. However, using the home office deduction, you're taking a little bit of that tax benefit each year on your return. Depending on the price of your house, how much you sell it for, what your gain is, there's a lot of factors. These two things could impact each other. So this is one of those very unique situations where if you are taking a home office expense and you know that, hey, there's a good possibility I'm going to be selling my house, at least mention it to your accountant or your CPA so they could be like, yeah, when I look at the numbers, probably won't affect you. Don't worry about it. Or they may look at your personal situation and say, let's talk about this a little bit more. So that's just kind of one of those things. There's a lot of factors that it's too hard to go into with everything, but just so you know that something to consider. All right, just make sure I'm not missing anything on chat. All right, the next big one, mileage and travel. And this is where we're going to talk about Aruba. I love discounts. If you're still in here, we're going to mention Aruba for you. All your mileage, we know mileage is tax deductible. Anybody know how much right off the top of your head? Every mile, how much money can you get from the IRS or use as a deduction on your tax return? A little bit more, 9 dimes. This for 2025, it changes every year. We are up to a little too high. I love discounts. 70 cents. I looked this up earlier to make sure I had the right number. 70 cents a mile. So that means if I drove 1,000 miles, and I don't know about y'all, but I drive way more than 1,000. But if you drive 1,000 miles, that's worth a $700 deduction. Okay, $700 right off of my revenue, my taxable income. It adds up quick. So you should be tracking your mileage. How you track your mileage? Whatever way works for you. Is the IRS going to ask to see your mileage log? No, probably not unless you get audited. But you need to know a way to track it. Make sure you're not mixing in your personal miles. Most of us don't have a business car and a personal car. Most of us have one vehicle that we're driving, right? Or yours and your spouse's or something. Make sure that you're not mixing up personal and business. Keep it business. If I itemize my deductions, does it have to exceed the standard deduction? Yes. Yeah, there is no sense in itemizing if it does not exceed your standard deduction. It doesn't serve you any benefit. You actually lose money if you try to itemize. You'll end up paying more taxes if your itemized does not exceed the standard. Is travel deduction capped? There are some limits. So let's talk about the travel on here. If you travel for legitimate business purposes, you are going to a whatnot meetup in another state. That's totally tax deductible for you as a business purpose, not for your spouse and not for your child if they are not part of the business or employees of the business. If you and your spouse are married, you both operate the business together, then it's a business expense for both of you. You decide to bring the kids along to make it a vacation, sorry, those expenses are not deductible for the kids. A lot of times it doesn't matter because you're going to be all in the same hotel room anyways, right? So that hotel room is deductible. But you'll hear a lot, oh, this is deductible. We can go to Disney and it's all deductible. Let's go down to Florida. Let's do a reseller meetup in Orlando and then we'll go to Disney. The expense to get to Orlando for the people operating the business or the employees of the business is deductible. Them tickets to Disney are not deductible. Business vehicle insurance is stupid expensive. Absolutely. Anything that once you put the name business in front of anything, it becomes triply more expensive. So is travel deductible? Yes. There are limits too, such as travel outside the country. My husband's from Mexico. We try to go down there once a year to source. That's not a deductible trip because we're not really going to source. We're going to visit family, and then I source as a side part of that. So I can maybe deduct some mileage when we're driving around Mexico to go to specific stores to buy specific things that I'm going to bring back and sell. But our flights there are not deductible. If there is out-of-country travel that is deductible, it's very rare circumstances. It has to be because there's no other way to do it in the United States. And so there's a lot of nuances to that. If you find yourself in that situation, talk to your accountant or CPA. Meals while traveling. So your meals usually are capped at 50% of what you spend. Because look at it like this. When you're at home running your business, you may, like, say if you work 9 to 5, like a typical 8-hour day on Whatnot, your meals aren't deductible, right? So not every meal is going to be deductible to the full extent when you're traveling. So it's usually capped at 50%. There's also entertainment in meals, but that's capped even a little bit more. And it's also very restrictive on what you can do on entertainment and meals. But that doesn't mean that you can't do it at all. I Love Discounts was in town. We met up with a couple other Whatnot people and we all had dinner. That would be a deductible expense. We were all Whatnot people discussing business over a dinner. So you have to watch. You have to apply logic. The thing with taxes is there's a ton of gray area, and that's where you get in trouble. That's where you're like, it sounds businessy, and the IRS comes in and says, yep, no, it's not, and I got you. So I always tend to lean on the side of being very conservative and a rule follower because then I just know they can't come back and get me for something. So what I'm confused about is if, like, you're filing jointly, okay, let's say with my mileage, expenses, sourcing, etc., I'm paying $15K. Next time included. Okay, keep going. I'll keep reading I'll keep watching for the rest of it. So when you're sourcing inventory, just make sure you're tracking your mileage. That's all deductible. Any questions on travel, business, any of that stuff? But I pay taxes to source. Why do I pay taxes on earnings if some of those earnings aren't earnings? Like what if I only profit 5K? If you profit 5K, if at the end of the day, after all your expenses, you profit 5K, you still have to report that 5K. The taxes you're paying to source are sales tax, not federal tax. And what we're talking about is federal taxes. So on your tax return, that's what you're calculating is federal tax. Train or airfare to go to a business event. Yes, you can do train, or you can do either one. You can do the mileage if it's a true business expense. So if you're going to a Whatnot event, or here's even a better one. You're going to like a plant expo or a sports card expo where you're going to be sourcing, you're going to be meeting vendors, you're making those contacts. That's a business trip. And you have to fly to a different state to get there, and you have to pay for a hotel. All of that type of thing is legitimately a deduction for you. Now, you take your spouse along who's not involved in your Whatnot business. No, you can't deduct the spouse's airfare, but you're probably going to stay in the same hotel. So you're saving money with that, right? And you get the joy of their company. But for the owner, the business owner, or employees of the business, those employees may be spouses or children. That would still be deductible. Tips, yes, tips are deductible. So you keep track of your tips for the porters, the cab drivers, your Uber drivers, the restaurant tips, all of that stuff. Absolutely. Now, what is not deductible, since you mentioned tips, and I had it on my notes, when you tip somebody on Whatnot, that's not deductible. Yeah, there's no business reason for a tip on Whatnot. You're tipping out of the kindness of your heart because you want to be nice. Okay, so I only pay earnings. Correct, Evermore Cottage. Only on those final earnings. So everybody, really quick, we take revenue, we minus out our cost of goods, we get our net operating profit. Well, cost of goods, shipping, net operating profit. Okay? Then we take all of our expenses, and then we get our net profit at the bottom. The net profit after revenue minus cost of goods minus all the rest of the expenses, our net profit is what is our taxable income. Okay, so the goal for taxes is to make that net profit as little as you possibly can, while the goal for real life and your financials is to make that net profit as big as you can, right? You always have these two competing things. For taxes, I want my revenue down here, but for my personal, my financials, I want my revenue up here. The goal is to take all the various ways of timing of your deductions, when you're buying things, how you're spending the money, to get those to kind of fill up that middle space. That's what we do as a CPA or a good tax accountant, is going to help you find that common ground between the two, where you're going to reduce it as much as you can for taxes and increase it as much as you can legally for your personal financial records. Mileage to the post office, absolutely. And that's a big one. Sourcing post office. Do you upload a spreadsheet when you do your taxes, and are all the pics and receipts if you do them yourself? I do them. No, I never upload spreadsheets, especially with like a TurboTax or something. You just key in the numbers. You should have some documentation, keep your spreadsheet, but then you just key in the totals. So if we're not into a positive net profit yet, there is no need to file tax. Oh no, you have to file because you can get a loss, and some losses you can carry over. So you absolutely still have to file. Here's the reason. You can legitimately make, if you make over $20,000, the Whatnot will send you a 1099-K. Not only do they send it to you, but they send it to the IRS. So the IRS is expecting Purple Turtle Hobbies to file a tax return showing $20,000 of income because they know you earned it, right? Okay, what Whatnot is not reporting is all your expenses. That's what you report on your tax return. So even if you take that $20,000 revenue and you report everything and you come to a net loss, good for you. You're probably not going to be in a position of owing taxes, but you've met your responsibility to file that return and let the IRS know that. You have to educate the IRS. That's what your tax return is. It's your record, it's your system, it's your report to the IRS to say, yeah, you think I made this much money, but I have all these expenses, so really I only made this much, so I'm only going to pay you this much in tax, or I'm not paying you anything because I have a loss. So that's kind of how those two things go together. What about devices, phones, printers? Absolutely. However, all of those things that you said, heart, center, soul, are tax deductible. If you use them, if they're ordinary and necessary, there's those two words again, for your business. If you use them for personal use, though, you can't take the full amount. Like, I can't take 100% of my internet. Do I use internet for Whatnot? Absolutely. Does my 15-year-old use it to do her school homework? Yep. Do I use it just to surf Facebook for fun? Yep. Does maybe the child use it to play video games? Maybe. I have to take a reasonable percentage. I have to say, 60, 70% of my internet's business use. And then I could take 60 or 70% of the expense for it. So you have to be reasonable. You may want to discuss this another time, but have been collecting my entire life and want to sell. How do I determine cost of items for selling? So Kate, if they're from a personal collection and they weren't bought for resale, if it is a personal collection, you've been collecting sports cards your whole life, jewelry your whole life, that doesn't go on your Schedule C. That goes on a Schedule D. That is, for the easiest way to explain it, that it's taxed as if it's like a stock or a bond, like an investment. So that's a completely different taxable type of thing that you're selling. In a seller support show, someone said that the IRS gives businesses 3 years of showing losses on taxes if they consider it a hobby. There is kind of like a rule of thumb that if you take, how did that go? If they consider, so, okay. First off, let's address if it's a hobby or a business. I have a PDF in my bin that helps you walk through to determine if you're a hobby or a business. You would be surprised. Most people think they're a hobby, but they're actually a business. And it's not what you think, it's what the IRS thinks. If you could show a loss for years and still be a business if it's legitimate. There's kind of a rule of thumb that the IRS will say that if you've made a profit in 3 years, you're a business. So there's some truth in that. That's one of those things that there's some truth in it, but it's been so distorted. I would just ignore that completely and look at, am I a hobby or a business, and then move forward appropriately. And again, it's how the IRS defines business. If you, like I said, I have a PDF, but you can also just go to irs.gov and Google, or not Google, but put in their search bar, hobby versus business, and it'll bring you up a lot of great information on the IRS website, which is a good place to get truthful, factual information. If historically the spouse and I file jointly, should I now file? Oh, no. Filing separately, when you're filing jointly and you guys decide to file married, so you have different filing statuses. You have single, married, head of household, widower, and then you have married filing separately. Married filing separately is very detrimental. Usually not recommended most of the time, and only under very specific circumstances. If you're married and your spouse is willing to file a return with you like normal, definitely file the return. You just attach a Schedule C to it as a sole proprietor, and you put whose business is it. It's going to ask you who owns the business. Put one of your names on it. If it's yours, put your name on it. So yeah, I would, without knowing a lot more information, just kind of like on the surface, when I hear, should I do married filing separately, I start to cringe, and I'm like, there better be some really good reason, because you're about to get hit hard with taxes. Okay, let's talk about just some very common joyful, I can't read it, joyfuling, I'll get it, 74 rating with a party of 3. Thank you for bringing your friends over. This is Zoe's Treasures. My name's Tracy, and we are doing a tax talk. So thank you so much. Let's do a little.
Welcome in, Raiders. Forget snakes and booby traps. Instead, free shipping and dollar starts.
You call that the single heart-centered soul? Yes. Yeah, if that married filing separately, single person tax, absolutely. All right, some overlooked ones. Did he at least label the button? He did label the buttons, y'all. My husband's usually here. He has an extended hospital stay, so he is not here, and he has given me control of the buttons. He did label them, but there's like 80 of them. So I'm trying to learn them. Let's see. This one is one of my favorites. That's one of my favorite buttons. All right. He is okay. He is getting better. He is having a stem cell transplant. Not to put all our business out there, but he will be in the hospital through the beginning of November. I do on Friday mornings try to give a little update on his health, because it's a quick and easy way to update a lot of people who do care about him. Okay, some overlooked write-offs. What are some of the stuff that we miss? Thank you so much, you guys. Subscriptions. We talked about this last week, but there are some technology and some subscriptions. Vendoo, Spotify if you use Spotify, Canva, your bookkeeping like QuickBooks, all of that stuff, all those subscriptions are often overlooked because we forget that we have them going to some credit card or whatever, and we don't put them on our in our accounting records, and therefore they don't get to your tax return. So those are big ones. Don't forget about those. Marketing. When you do a sponsored promotion, when you promote through Whatnot, whatever way you choose to do it, that's deductible. Keep ChatGPT, yes. Absolutely. If you're paying that paid subscription, you're not just using the free one, 100% deductible. If you're using it for business. I mean, if every now and then you want to go and find something funny personal, that's not a big deal. But if you're using it on a regular basis for business, your giveaways, we talked about giveaways are deductible. If you buy business cards or cards, like little promo cards to put in your packaging materials, I do like little cards that I put with discount, like coupon codes. Those are all deductible. So anything marketing wise is deductible. Professional services, CPA, bookkeeper, accountant, go to H&R Block. Even for your personal tax return, if you itemize, If you itemize, use a Schedule A on your personal return, what you pay your CPA for your personal is deductible, and the same with your business. Unfortunately, massage therapist is not deductible. It may be on your personal if it's a required medical need. But I think it should. I mean, I would love to have it for us, but education, you guys, this is one that's often missed. If any of you watch Green 13, he's always given us good book recommendations. Those are business expenses. If you're reading them to learn how to do your business better, your books that you're buying are tax deductible. Reseller workshops are tax deductible. If you have to pay to attend any type of a reseller workshop, that's an expense on your business. Here's another one we often miss: insurance and bank fees, or the interest on a credit card that is a business credit card. Simply Beth rating with a party of
Welcome
5.
in,
Thank you so
Raiders.
much. Welcome to
Forget
Zoe's Treasures.
snakes and booby
We are doing a
traps.
tax
Instead, free
talk
shipping and
tonight.
dollar
For some reason, I
starts.
can't say tax talk. So please, if you have any tax or accounting questions, throw them in the chat. Since we do have a bunch of new people, really quick, my name's Tracy. I am a CPA licensed in 2 states. I used to be licensed in 4. Didn't need the other 2 anymore because I don't practice there. I have been a CPA since 2013, but been in accounting for over 30 years. So I use this as a way to bring my experience to Whatnot. All right, what is not deductible that I hear a lot? I actually heard this the other day in a chat show. Put a yes in the chat if you ever hear this type of a statement. If something doesn't sell, just donate it and then you can write it off. If you have old inventory, donate it and you can write it off. I know we've all heard that. Yeah. I love discounts, heard it possibly. All right. Yes, you can donate stuff. It is not deductible on your Schedule C. It doesn't work that way. Exactly. If you are a sole proprietor, okay, we're not talking LLC, S Corp, regular corporation. We're talking sole proprietor. You file a Schedule C or an single member LLC. If you are filing a Schedule C and you donate something, that is a personal donation. There is no place on that Schedule C to put. There is no place to put that donation on your Schedule C. It is deductible as a personal itemized expense. So earlier, Evermore was saying, hey, should I itemize or do the standard deduction? It depends on your situation. If you're itemizing, you can take your donations. Now, for business purposes, you have a product that you bought. So it went into your cost of goods, right? It's sitting there as an asset. So you have this as a business asset because it's part of your inventory. Then you donate it. So you can remove it as a business asset. It's still not an expense to your business. It's just an in and an out that doesn't count for anything. It washes to zero. And then that donation goes to your personal side. So from a Whatnot perspective, let's just think this through from a Whatnot perspective. You have stale inventory. You could do 2 things. Well, 3 things, I guess. But you can give it away, 2 things. Give it away, whether it's to a donation to a Goodwill, thrift store, whatever, or a friend. You can give it away or you can sell it. If you do not itemize on you don't use a Schedule A, giving it away does nothing for you. 0. All it does is free up the space. Maybe that's worth it. Maybe, depending on your situation, just having freed up space may be worth it. But if you're not itemizing, that does nothing for you. If you are itemizing, possibly. The other thing you can do is sell it. Why don't you take that stale inventory and sell it for $1? What's harm going to do? Maybe it'll get bid up. Maybe you'll make some money on it. I mean, unless it's going to cost you like way too much to wrap it up and pack it and all of that. Just kind of think that through. These are some of those decisions you want to think through. One of the things we didn't talk about, and I am way over my time, but I'm just going to keep talking because I missed CG by now. One of the things somebody had mentioned earlier, what about like big ticket items? You buy a shed, you buy camera equipment, computer, stuff like that. Those are called fixed assets. So laptops, printers, cameras, shelving for your storage unit or storage, wherever you're doing. big, not really tubs, that's just an expense, but anything that holds a significant value with a life expectancy, how come I can't talk? Expectancy. If it's going to last longer than a year. All of those things are called fixed assets. These are assets of your business. So this is, I don't know if I can show. So this is one of my husband's little equipment with all the buttons this is the small one that he's making me press. That's a fixed asset. That's something that's going to last longer than a year. And it costs usually over $500. You usually kind of have some limit. There's not a set hard and fast rule. You have two things you can do with that. You could depreciate it over a period of time. For example, if I buy a $1,000 computer, I can take $200 of that expense over 5 years. So that means I can stretch out that expense. When does that help me? If I know that my income is going to stay consistent and I want to match my expense to my income to zero it out so that I have zero tax liability, yes, a storage unit, if you're renting it, is different. That's a straight up expense. If you buy like a shed or something, that's what I'm talking about, a fixed asset. Yes, a new phone. This could be it because phones aren't cheap anymore. Phones are like fixed assets. They're like $1,000 purchases nowadays. Trailer, shed, yes, those type of things. So I could depreciate it over its expectant life. For a computer, that would be 3 to 5 years. So you take a $1,000 computer over 5 years is $200 a year. Or you're allowed what's called Section 179, which means I can deduct the whole $1,000 this year. Why would I want to do that? Maybe I've made a lot of money this year and I don't expect to make too much next year. Well, I really need my expense this year to offset my income from this year. It's all about timing of those expenses to achieve the tax goal that you want. So this is where you really need a good CPA or accountant to help you know when you're buying this equipment, what are your future plans? What do you think is going to happen? What are your projections for the next couple of years? When is that expense for these big ticket items going to be the most beneficial to you? So that's kind of how you start to play with the numbers in taxes. And I know that's kind of really, we can really dig into the weeds with that. But I bring it to your attention to know that there is some flexibility, and having a good CPA and a financial planner is what helps you with that, particularly as you start to grow and invest in a warehouse and all of the stuff that goes into a warehouse and box crunchers and munchers, whatever you call them, things like that cost a lot of money. When should you be taking these expenses based on what your projections are for your business? Yep, so you just got a shed. So these are those things that you want to look at. Okay. Red flags. What are the red flags? Box muncher. She has a name. I'm sorry. Sorry, box muncher. Okay. Real quick, we're going to go over red flags, and I promised somebody I would answer the LLC question if you're still here. I'm sorry I made you wait. Common red flags. Writing off personal vacations as sourcing trips. We talked about that. Make sure it's ordinary and necessary in your course of business. That's a big red flag. If you have consistently high travel expenses, the IRS may look at that a little bit. That is a red flag. So I'm not saying there's not legitimate reasons. Just know, making sure you're not losing them travel receipts if you're doing it, that you could back that up. Claiming 100% of phone and internet. The IRS is not stupid at all. Okay, they know. If they look and they're like, you're claiming, your average cell phone bill is what, 150, 180 a month, and that's what you're claiming, multiply that by 12 on your tax return. They're like, like these are things, and they have computers that analyze all of this. Those are things that are red flags. Again, only take the percentage that actually is applicable and ordinary and necessary to your business. So the percentage that would be appropriate, you have to determine that. And I actually will write, not a whole paper about it, but a sentence or two. I'll say 60% of my internet is business use because, and I just write, how did I come up with that? Because I'll tell you what, the IRS can go back 7 years. 5 years from now, are you going to remember how you came up with 60% of your internet is deductible? Probably not. So it's always good when you're using a pro rata amount or a percentage with your tax records, whatever folder you keep, write a little explanation. My internet bill, I came up with 60% because we primarily use it for whatnot. Our child uses it very, minimally for her schoolwork. Or you can look at your cell phone bill and do the same thing. So I would definitely say to write a sentence or two, just in case you're ever audited. It's better to take the time now than just to get hit on it years from now. This year we'll have three streams of revenue. Is there a limit to how many there are? No, not at all. And actually, most of the time they don't even care. So it depends. If there are three completely separate businesses, you're probably reporting them on separate Schedule Cs. If they're similar business, like I have a Whatnot stream of revenue, I have an Etsy stream of revenue, I have an eBay stream of revenue, so maybe it's all reselling, but to me they're different streams of revenue. Or maybe I have a booth, I do an antique booth that I sell on Whatnot. It's still the same business. They don't care. You just report it as a revenue number. They don't even care what those streams are. The only time they care is if they're very, very distinctly different business types. So I'm an Uber driver and I resell on Whatnot, aren't really the same type of business. Those I would report on two separate Schedule Cs. Heart-Centered Soul. If you don't remember this, go see my YouTube. Right up here, you can always watch it at any time again. I missed a question. Okay. Oh, what if a flight cost $500, but we use points? How would we treat that? There's no value, there's no cost. If there is physically no dollar amount associated, then it doesn't cost you anything. So I'm assuming you have a business credit card. You use that in the normal course of your business. That accumulates points. You need to go on a business trip and you used those points. That there's no cost associated. So there's no write-off, there's no tax deductibility. It would make more sense to accumulate those points and use those points personally. There is no law against using those points personally. So I would save the money on the personal side and pay if I had to go on business and make what I'm paying deductible. Completely different. I state DS and what? Oh, completely different. Yeah, so if that's the case, I without knowing any more detail, it seems as if you're probably want to do different Schedule Cs for that. Because even the expenses, all of that type of stuff, there may be some. Now, there's no double dipping. If you do multiple Schedule Cs because you have very, very different types of businesses you're operating, say maybe you're a photographer, you're a wedding photographer, but that's not consistent, that's hit or miss, and maybe it's really just heavy in certain months. So in order to make ends meet, you're also selling vintage decor. Two completely different businesses there. So now you're going to have a Schedule C as a wedding photographer and a Schedule C as a Whatnot reseller. I cannot claim my home office on both. I can't claim the same expenses on both return. Okay, so you have to make sure that you're allocating appropriately. It gets more confusing the more business lines, like separate, distinct business entities that you have. Especially when we're sole proprietors and we're not having like business structures. So husband and I both have full-time jobs, so file normal taxes, Schedule C for, yes, absolutely. Yeah. You have your W-2 goes on your tax return from your full-time jobs, you and the spouse, and then a Schedule C for Whatnot. If we have to pay quarterly estimated taxes, can we pay them as a whole or should we separate them out per business? Pay them as a whole. They don't care about the business for that, for estimated taxes, because estimated taxes are based on what your expected tax liability is and how much you're going to owe the IRS. The IRS wants either 90% of what you expect it to be or 100% of last year paid in every year. So they don't care where the money comes from as long as they're getting theirs. It's just when you're reporting it at the end of the year, you want to separate that out. All right. Another red flag, inflating deductions without receipts. Just be honest. Basically, all that is be honest. Err on the side of being conservative. There's a lot of, like I said, there's a lot of gray area. There's a lot of people who will say, I do this or my accountant does this. Doesn't mean that it's right. find a good tax accountant or a CPA or a good bookkeeper, work with them, make it, and do it right. Make sure you're getting good advice. Part of it is just because this is what I've done for so long. I have to bite my tongue consistently in chat shows because it's not nice to go around and tell people that they're giving bad advice. Just that doesn't make you look very good. So a lot of times I have to bite my tongue because I do hear a lot of misinformation, not only on Whatnot, Facebook, any social media site. What if you're sourcing at a flea market or garage sales and just make up your own receipt? Basically, keep a little notebook, write the date, what you bought and how much you spent. That's all you need. You just need a consistent record. You don't have to itemize everything out. You just have to say, garage sales Saturday, February 2nd, spent $300. That's all you need to do. I should totally go around and tell people that they're giving bad advice. No, I don't think that's a good thing to do. But I do, and I just say it just because, and I know it's like, this is my thing because this is like where my education is and what my daily life is filled with. If they say it's deductible because their tax person says so and you do it and the IRS won't take that as an excuse, you still, 100%. Thank you, Crystals, 100%. Here's the other thing most people don't realize. Heart Center Sold, the dollar store does, and that's a great way to keep a record. This is what a lot of people don't realize. You can hire the best CPA in the world, the best tax accountant, the best attorney. At the end of the day, your signature goes on that tax return. The IRS holds you responsible. The CPA, the accountant, they're not going to get dinged unless they did something fraudulent, unless they purposefully misstated your tax return. They're not going to get in trouble. You are. You need to understand basic tax law, basic structure of how your tax return goes, what the revenue is, what the cost of goods, and what the expenses are. You need to be able to look at your tax return and say, from my knowledge, this looks correct. Because I can guarantee you as a CPA myself, you're signing a contract with them, whether you realize it or not, that basically they're saying, I'm preparing your tax return off the information you gave me. I'm not held liable. And that's what happens. Your signature's on there, you're liable. Taxes may be a deduction. Make sure. Oh my gosh, I love discounts. You're killing me. All right, let's do some hearts here. Thank you. Okay, I have been on for almost an hour. I do try to keep these to an hour. So if there's any last questions, I'll address those. But I do try to keep them to an hour just because it's such a heavy topic. I have a show tomorrow, y'all. I do got to give a plug for my shows. Hi, Out and About Vintage. Joyful, I will take a look, answer that question in 1 second. Oh, and I promised somebody the LLC. Real quick, I'll give you my LLC talk. I do have a show tomorrow, y'all. It's French Country. And then the next day on Thursday, I am doing a raid train hosted by Choco Dog 6. It is the pink raid train to support breast cancer research. So please come check those shows out. Both of them are going to be great. And any sellers in here, please go ahead and promote. I'm going to give my little LLC talk really quick after I answer this question. Do you think the tax programs are worth it, or do you think hiring someone is best? If you do not feel that you can adequately know your tax return, I would hire somebody. And at least maybe for your initial year. A lot of tax professionals, especially CPAs, will walk you through stuff and help teach you. The other thing you can do, I don't have the whole thing here, but if you go to the irs.gov, www.irs.gov, don't go to .com. I don't know what comes up, probably not good. I've heard some horror stories. Anyways, Schedule C instructions. Download it. It's only like 20 pages. That will walk you through your Schedule C line by line by line. You do that and you use a tax program, you should probably be pretty good. However, if numbers aren't your thing, pay somebody to do it. But what is the best and efficient use of your time? Think about it in that manner. All right. Am I missing anything? I'm skipping over some of these because you're going to make me blush. I know you are. Is my tax books or workshop, or does PDF? Yes, all of that's deductible. Tax books, workshops, all of that. Yes, 100% deductible. Let me see. Okay, let me read it. Hold on. Let's see. Tax docs is very treacherous because she's known for how to handle your assets. Oh my gosh. That's like sleep with an accountant. They're good between sheets. You ever heard that one? There are a ton of dirty accountant jokes out there. Just saying, we're not all stuffy. We do have a sense of humor. Okay. What was I going to say? LLC, real quick, because somebody asked me. I'm so sorry I kept you waiting. I live next door to a dirty accountant. LLCs, I get this question every single time. Nobody can tell you if you should form an LLC or not. Don't just go and form one because you're a business. You're like, oh, I'm in business. I need an LLC. Please don't. There is a time and a place for LLCs, but you don't need one to do Whatnot business. I'm a CPA. I don't have an LLC. Most of us on Whatnot don't need one. However, if you're going to own assets, like a warehouse, you're going to hire employees. There's some other things, maybe whatever your growth plans are in the future, or if you're bringing in unrelated partners, like not your spouse, but you have a partner, sister, cousin, best friend. There are times when it's appropriate. But just because you pick up your phone and you hit that go live button and you're selling something, it does not automatically mean you need an LLC. Please talk to a CPA, tax attorney, and a financial advisor before you make the leap into an LLC. It comes with a lot of legal obligation, and it's harder to get out of than just saying, I don't want to do business anymore. That's my LLC talk. All right, I try to condense it really short. I'm going to figure out how to say all of that in 30 seconds one day. All right, you guys, we are going to go raid. I've been on for a little bit now. I do appreciate all of you. I won't be on next Tuesday because I have a business trip out of town. Tax deductible on my employer's dime, not mine. But I will be back the Tuesday after that. I just talked about my next 2 shows. Friday, I have a chat show, usually not taxes. It's just whatever this week is on goals. So come see me, and we'll talk some more. I'm going to go find somebody to raid. Let's see who's on. Thank you, Sunshine Vintage. Let's see here. Goodness, I don't know who's on this late. At Home with Chris. Let's go see At Home with Chris. She sells vintage decor. Southern Charm, thank you so much. You didn't have to do that. Y'all have a great night. Uh-oh, hold on.
Honey, what are you doing?